So only 5 weeks left. That's when the pause of paying back your student loans is ending. Right now, the Biden administration is still deciding whether to extend the payment pause. But for those with student loan debt, be prepared for what's to come. So joining us this morning to talk about the end of the pause is Chris Nemes of Nemes Rush Family Wealth Management. Thanks for joining us, Chris.
Thanks for having me.
Of course. So as of right now, we're 5 weeks away from the pause of the student loan repayment ending. What does everyone with student loan debt need to know before they have to start paying those loans back?
Yeah, there's definitely a few things that they should all be aware of. First and foremost, since March of 2020, there's been no payments that have been due, and there's been 0% interest on all student loans. So now that up until really August 31st, that will continue to be the case. The borrowers need to make sure that their contact information is correct with their loan servicer. So when they turn on auto debit to make their payments to the loan servicer, they need to make sure that their banking information is correct. They need to make sure that all their demographic information is correct as far as their name, their address, et cetera. And then it's also a good time to start considering income-driven plans if that's something that you're going to be eligible for. So that's an option that helps borrowers as they get back to paying off their loans. Maybe there's a way that they can work with these loan servicers to reduce their payment.
That is such a good point because in the last 2 years, I have a new credit card number and a new address. So I'm sure I'm not alone in that. So Chris, because of the current states of the country and inflation plus rising interest rates, could these loan payments be higher than what people were paying before?
So the interest rates that each of the borrowers have currently, those will be locked in for what they initially had signed up for. But all new student loans, actually in this year, it's a great question because the rates are higher now than they have been for the last 4 to 5 years, just because interest rates have been rising so quickly. So while consumers are being hurt by the fact that inflation has risen to the tune of 9.1% since last year, anyone who's going to be taking out a new student loan will also have a higher interest rate. So for undergrad students, that's going to look like about 5% at the moment on average. And for those that are in professional or graduate degrees, if someone's looking to go get a master's, go back to school, those will actually be 7% or above. So yes, the interest rates have certainly impacted the rates for new borrowers. Those that currently have the loans, those will retain their rates, and the payments will begin on August 31st, if there's nothing that changes between now and then.
Okay, and then speaking of what's changed between now and then, talking about March of 2020, a lot has changed, and people have lost their jobs, gotten new jobs. So how do we get financially prepared to begin repaying these loans back and kind of get in the habit of that?
Yeah, the best way that I can explain this is even look at our hometown Detroit Pistons, right? And you look at Cade Cunningham. Why is Cade one of the top players in the league right now? And the answer to that is because he's mastered the fundamentals of basketball, right? And so whether it's dribbling, passing, shooting, he's in the gym, he's practicing, he knows the fundamentals better than every other player because he practices those. So for student loan borrowers, as these payments begin, they need to master the fundamentals of personal finance. So first and foremost, budgeting is key. And nobody loves to sit down on a Saturday or a Sunday and draw up a budget, but it's very important to look at your own personal situation as if you were looking at a business, right? What's the income that's coming in? What are the expenses that are going out? And what's left over afterwards? And your expenses will rise because the student loan payments are due. So as a result of that, there needs to be a lot of discipline on the borrower's standpoint to make sure that they can service that debt and pay off that monthly payment. A normal plan is 10 years, right? So over the course of 10 years, paying that off. And I think that's a really important aspect of it is the budgeting. And then second is it's just that, put on the blinders financially and just know that this is something that you can overcome, and student debt can be very overwhelming for a lot of people because everyone has a personal situation. Everyone's situation is different. So as you look at your own situation, put the blinders on, be financially disciplined, and make sure that you're making your payments and that you are staying within your budget, because with costs rising, it is very difficult. And that's, as of the last 2 years, been something that's really boosted from 1 to 2% inflation all the way up to 9 or 10.
Right.
So,
all right. Well, thank you so much, Chris. We're out of time, but I love the analogy there with Cade Cunningham, and I'm going to take that advice, and I know our viewers will as well. Thanks for joining us, Chris.
thanks for having me on.